Okay, when you look at the cybersecurity space, there's one name everyone's talking about, CrowdStrike. But, this stock, it's a real puzzle. Is it really this untouchable darling like Wall Street says, or is there something else going on, something in the data screaming that maybe this high flyer is priced for, well, an impossible future? Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks.
Exactly. That's the core conflict, right? We're going to dig deep into CrowdStrike today, ticker CRWD. We're using our research built together just this morning, October 14th, 2025, around 7:30 a.m. Eastern. And our mission really is to weigh that undeniable price momentum against some pretty challenging signals we're seeing on the valuation side. And, setting the stage is important here. The market vibe today, definitely risk off. The NASDAQ is already down over 1% pre-market. And why? Well, you've got Fed speakers scheduled today.
The Fed always makes the market jittery.
Yep. Investors are nervous about potential comments on interest rates because when rates look like they're going up, those expensive growth stocks often get hit hardest. And CRWD, it's pretty much the definition of a high-growth premium stock.
Right. So, the market's nervous, but Wall Street seems like they couldn't care less when it comes to CrowdStrike's future, huh? Analysts are just piling in. The consensus is a strong buy. I think nearly 2/3 of 53 analysts covering it. And just now, Royal Bank of Canada boosted its price target way up to $540. Seems the conviction's running really high there. But hang on, before we get totally swept up in that analyst hype, let's look under the hood a bit at the signals from inside the company, because this is where our research found something, well, kind of jaw-dropping, a real disparity.
Yeah, this is where the story gets, let's say, contradictory.
Yeah.
So while you've got these external analysts throwing out $540 targets, the company's own president recently made some pretty significant sales. We're talking over $12 million worth of stock unloaded.
12 million. Wow. Okay. That's not just pocket change. Is that just, normal scheduled selling we see sometimes? Or does selling that much, especially near all-time highs, maybe suggest, I don't know, less confidence internally?
Well, that's exactly the question you got to ask yourself, isn't it? And that skepticism, it's reflected really sharply in the fundamental data. So the stock's trading north of $500, right? But our own free cash flow model, it puts the fair value for CRWD at just $98 a share.
Whoa, wait, $98? Did I hear that right? That sounds almost like a typo. How can a company that's so respected, a market leader, get a valuation that's like 80% below where it's actually trading?
Well, it comes down to expectations versus, let's call it reality, or at least a more grounded reality. Our model is pretty punitive, because the current price basically assumes years of just flawless, accelerating growth. Perfect execution. But if that growth rate slows down even a little bit, or maybe margins get squeezed by competition, which is always a real risk, then the future cash flows they just don't support this huge premium. The market's betting on absolute perfection. Our model, it's priced for, well, something closer to reality.
Okay, that is a staggering gap between hope and calculation. So let's pivot to the technicals. What's the trading crowd thinking about all this?
The trading crowd right now, they're leaning bullish. It seems mostly driven by that price momentum. We definitely see optimism in the options market. If you look at the put to call ratio, which kind of measures fear versus greed, it's really low at 0.47. That suggests way more people are buying bullish calls than protective puts.
So not much fear there yet.
Not much reflected in options, no. And the bears, the short sellers, they're not really challenging this stock either. Short interest is pretty low, around 2.72%. But technically, there are some, let's say, warning signs creeping in.
Okay, like what?
Well, the long-term trend is undoubtedly powerful. It's been a strong climb. However, momentum looks like it might be getting a bit tired. We're seeing some divergence on indicators like the RSI. That suggests the current strength might not be sustainable without maybe a pause or a pullback. Plus, volume flow is kind of neutral, not really confirming the recent highs. And volatility, it's ticking up. That usually signals bigger price swings are probably ahead.
So, okay, we've got Wall Street love and strong momentum on one side, but then this huge valuation gap and significant insider selling on the other. How do we synthesize all that? What's the strategic takeaway for the near term?
Right. So weighing that technical strength, which is undeniable right now, against the, frankly, alarming fundamentals, it leads us to an official verdict of cautiously bullish.
Cautiously bullish. Okay.
Yeah, the momentum's just too strong to completely ignore, but you have to acknowledge the risk here is, well, extreme. So for this bullish view to stay valid, you need to watch two really key levels. First, the bulls absolutely have to defend $500. That's not just a number, it's a huge psychological level. And there's a mountain, basically, of options contracts sitting right there.
Got it. $500 is the line in the sand.
Pretty much. Now, if it breaks decisively above $511, that would confirm the strength is still there. And it could open the door to testing that $540 analyst target we mentioned. However, the crucial invalidation level, at the point where this bullish idea is just wrong, and the bears might take over, that's a solid close below $497.
Okay, $497 is the breakdown point. Makes sense. So, CrowdStrike really feels like a classic case, doesn't it? Wall Street absolutely loves it, showering it with praise. But the company's own valuation model and even the key executive seem to be, well, swiping left, so to speak. It's kind of a do as I say, not as I do situation. You know, you're basically forced to choose. Do you believe the chart momentum, or do you believe the fundamentals and the checkbook?
That's a great way to put it. And that's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or, consult with qualified financial advisors before making any investment decisions. Thanks for tuning in. Catch you in the next episode.